Let us know when you're ready. We good? All right. Morning, everyone. Hope everyone had a good day yesterday. It's been a fun little conference here in Lake of the Ozarks. Anyone else here for the first time in Lake of the Ozarks? Oh, yeah. I bet the show drew some people in. All right, we're going to jump right into the panel. My name is Vays. I come from the traditional finance space. Started out in crypto just talking on stage at conferences. People got interested, got some interviews, wrote some articles, was a guest on several YouTube channels, then eventually started my own. Keep doing the same thing over the years, traveling to events, speaking, moderating, and running the YouTube channel, where we've covered pretty much every aspect of Bitcoin. And I'm happy to moderate this panel of mining. I guess we have 2 pool operators. And you know what? I'll let you guys introduce yourselves. Ethan, we'll start with you since you're right next to me.
Yeah, great to meet everyone. Met a lot of you already here today. My name's Ethan Vera. I work for Luxor Pool. We founded the company 3 years ago, really with the goal of building institutional mining pools for North American farms. And so we've built 17 different mining pools over the years. We currently run 10 of them, Bitcoin being one of them, but 9 other coins as well. So we specialize kind of in the mining pool hash rate management business. Other than that, we also run a data website called Hash Rate Index. Got the shirt here. Basically tracking everything from like ASIC rig prices to the value of hash rate over time. So yeah, make sure to check out that website too. Thanks for having me on.
There's still 9 proof-of-work shitcoins still alive that require mining pools?
Surprisingly.
All right. I'll have some more questions for you later.
Hello, everyone. My name is Romain. I am the co-founder and CEO of CCU.ai. We are a Bitcoin miner from Quebec. Do you hear me? It's okay?
Yeah.
Okay, cool.
Yeah, we're good.
We have a contract for 20 megawatt of power. We are exploiting or using 7.5 megawatt and building 12.5 remaining for the month of November. Last month, we announced a transaction on the TSXV to get listed on the Toronto stock market, like a DMG before us. And we've been working with Luxor since, 2 months? And that's it.
Oh, wait, are you guys also a pool, or you just mine yourselves?
We mine ourselves.
You just mine yourselves?
Yep.
Okay.
Hi, everyone. I'm Edward Evenson. I'm the head of business development over at Slush Pool and Braiins. Slush Pool was the first mining pool back in 2010. Been mining since. I think we've helped miners mine over 1.3 million BTC since then. And we've also branched out into a bunch of other software projects like Braiins OS, firmware that runs directly on your devices, currently supporting Antminers, What's Miners coming very soon, and also the authors of Stratum v2, which is the next generation open source mining protocol, offering some key improvements and upgrades to Stratum v1, which we introduced back in 2012. So mining pools and everything software for Bitcoin mining, essentially.
All right, I got a bunch of questions, but I guess since you mentioned Stratum v2, I've been actually keeping an eye on that and been asking questions about it for over a year now. What's the status on that? Do you want to give us a quick update?
Yeah, so it's a very, very...
Oh, maybe explain what it is first, because this is being recorded for YouTube and stuff, and some people don't know.
Yeah, of course. So Stratum v2 is basically, it's an open source mining protocol. Basically, these mining protocols are what mining pools are built on top of. It's like the network infrastructure for the pool. And currently, all mining pools base their protocol on Stratum v1, which was something that was introduced in 2012 to replace the open source Gitwork protocol. Previously, miners connected directly to the Bitcoin daemon. It didn't really scale, had a bunch of problems. v1 came in to resolve this. So v2 is sort of like the next generation of v1, hence the v2. Offers improvements in security, so it shores up some security holes that v1 had that allowed people to steal your mining shares and potentially submit them as their own. Generally not a huge problem, but just removes that potential for a man-in-the-middle attack. It makes it easily extensible, so basically more easy to standardize. So the protocol can evolve with the industry as it scales in the decades to come. What else? We have efficiency improvements. So it's uses about 2 to 3 times less bandwidth for data transfers, less stale submissions, less latency, zero-time backend switching. And then lastly, and probably the most discussed part of it, is the job negotiation feature, which allows miners to build their own block templates and select their own transaction sets. So the miners begin choosing which transactions go in the block as opposed to the pool. So shifting more of that power away from the pool to the miner. Of course, the pool can reject it if it's an invalid block template, hence the negotiation part. But what this does is allow the miner to negotiate with the pool and decide which transactions are included in the block they mine.
And I think that's the most important part, and that should decentralize mining a lot more now that it'll put any miner in control instead of the pool operator. So Luxor, you guys got a bunch of pools. What do you think about it, and how soon? I mean, are you looking forward to Stratum version 2 and using it? And what do you think about the other miners or mining pools, the big ones like Antpool, Poolin? Do you think they are optimistic about this thing, or is it going to be a bit of a battle?
Yeah, and maybe just for a bit of background here for everyone in the room, one of the really interesting recent events that highlighted the relationship between miners, mining pools, and the Bitcoin blockchain was Taproot. So Taproot just went through, and the people who are voting on Taproot are the mining pools. And so if you go to taprootwatch.com, you can see the various mining pools signaling for Taproot. And so this kind of highlights what the problem that Stratum v2 is trying to solve is that 15 different companies, 15 different executives are deciding what happens on the network. Maybe it's a good thing like Taproot, maybe it's a bad thing in the future, and that highlights why something like Stratum v2 is important for giving power to more people than 15 in the room. So I think overall we're generally supportive of the concept of job negotiation and giving power back to the miners. I think it's an evolving topic and one that won't happen overnight, but I think the work that Braiins guys are doing on it is great. I'm hopeful for the adoption, but I'm also skeptical that the Chinese pools will move forward with it in the near future.
Well, we're going to jump over to Johan, and you made a great point just now. This is like the last follow-up on Stratum v2, is that if Stratum v2 was already deployed on these pools, it might be a lot harder to get Taproot in, because now you have, instead of the 15 pool operators voting for Taproot, now you need thousands of individual miners, getting their software up and running. And what's your view on that?
I think it's an interesting question. As a miner, we work with pools to validate and decide the kind of change we would like to do for the blockchain, but we don't really participate into that debate as mining ourselves. We are just putting our hash rate to pools, and everything that is good for bringing back power to miners is good to our books.
A quick comment on that too, because I know there's a lot of miners in the room. I think pools are generally getting more responsible these days. Like the whole SegWit fiasco was a highlight of mining pools being somewhat irresponsible. Whereas today, I think mining pools are generally trying to be good citizens of the network, and that's why they're more forward-facing. They're trying to get involved in things like Taproot. And I think, in the meantime, while we wait for innovations like Stratum v2, as a miner, you should be connecting with your mining pool and letting them know your preferences on things like Taproot. Because at least at Luxor, when we were looking at these types of things, we want to check in with our miners to make sure that we are going with what they want. Because at the end of the day, mining pools represent their miners, and there's no formalized technology way to do this yet, but there is kind of the informal way, which is communication with your business partner here.
I should also add that Stratum v2 wouldn't make it more difficult to implement something like Taproot, because in the end, the pool has to upgrade their nodes as well. Job negotiation is strictly about block templates and transaction sets, so even if individual miners, it wouldn't give them any more power in terms of signaling for something like Taproot. Really, the emphasis really should be on the negotiation in that title, because pools can potentially reject it. What this does is make sure everyone's sort of incentives are aligned. So if one pool allows the miners to include the transactions, or rather choose the transactions they want to include in the block, especially as transaction fees, which are only about 10 to 15% given any week of the block reward, turned into something like 50% further down the line, it's going to become more and more important, and miners are going to demand it more and more and more, especially as we see stuff like block space turn into a commodity. They're going to want more say in what goes in those blocks.
All right. Well, let's move on to another topic that's been, well, feels like it gets hot every 3 to 6 months, but now it's getting more serious. China trying to ban mining again for like the 20th time. But this time it might be for real because everyone I asked in the mining space is saying, yeah, hash rate is moving out of China. So what are your thoughts on that? And where do you see it moving to is the big question. Anyone can jump in.
It's true. It has been a subject for the past 10 years, I would say. This time it sounds to be more feasible, or we see more like miners shutting down their operation, and we can see that even with the hash rate, with the difficulty that has been dropping for the past few weeks now. Is it going to happen in the long term? Who knows? We know that Chinese miners are moving their operation between winter time and summertime, depending on the hydroelectricity they can get. They are now close to hydroelectricity dam until October. So are they going to relocate to other places or close shop? We will see. I believe Chinese miners are also willing to go to other places in the world, but it's more difficult to relocate your miners. And also, if the shutdown really happens, there will be so many miners that won't be able to relocate that it's going to create even more drop into the hash rate. Now we also know that this question was coming back and forth all the time, so we're going to see what's going to happen in the coming months.
Yeah, and just building on some of that, I've been in talks with a lot of miners from China over the last couple months. I mean, especially some of the larger ones, they've been talking about moving and distributing their operations since like mid-2019, so this isn't necessarily something that's new. Recent events have just sort of accelerated it. Most of the shutdowns were first in Inner Mongolia, then Xinjiang, and most recently Yunnan. And China's very interesting from an outside perspective. A lot of people think it's extremely authoritarian, so anything coming from Beijing or the CCP, what they say is law and it's acted upon immediately. It's actually, China's a very big place. There's a lot of people, so it doesn't exactly work like that. A lot of it goes down to the provincial governments and personal relationships, something referred to as guanxi, and also what brings money into certain locales and what brings money into certain bureaucrats in those locales' pockets. So it's a little bit more spread out, and what we see in probably places like Yunnan is when inspectors come in these hydro stations, you'll see a lot of machines shut down and not mine, and then when they disappear, they'll probably turn on again. I think Xinjiang and Inner Mongolia is a lot more serious. Those seem to be very straightforward, kind of blanket cease Bitcoin mining, and we've seen a lot of that hash rate disappear, as Romain said, as a result. Many of the miners that are currently mining in Xinjiang are looking to move those existing devices to places in Central Asia, like Kazakhstan, and a lot of these large miners have already placed, pretty significant orders with the manufacturers like Bitmain and MicroBT, and are having those new machines that are being shipped throughout the year from Malaysia, for Bitmain machines anyways, to be shipped directly to, EU, North America. The problem is I don't know how sustainable this is on like a shorter time frame, 6 to 8 months say, because there just isn't enough rack space in North America anymore. It's all pretty much filled up. A lot of people are building out new capacity through Q2 of next year, which should resolve some of that sort of glut. But it'll definitely be very, very interesting to see what sort of unfolds over the course of the next couple quarters here.
And I don't think it's only the lack of rack, it's also the lack of planes and boats to move such many miners at the same time. But I think one thing that is important also in this subject is that for the first time, China is also using the environment as a way to close down miners who are mining with coal. And it's an important subject, as we know. So we're going to see if they are going to follow with what they want and what they announced.
Let's transition to the environment. And man, Elon opened a can of worms there. So everyone knows what happened. All of a sudden, Elon Musk sends a tweet saying he, in his opinion, with absolutely no research whatsoever, Bitcoin is somehow destroying the world. And there's one thing Bitcoiners are very good at, besides being toxic, is research. And now the research is trying to explain to him that Bitcoin is one of the greenest, uses of energy in order to produce something very, very tangible. While at the same time, a coal power plant goes down in China and a huge hash rate drops. Was it a coincidence? How do you reconcile the two, and how do you explain to the environmentalists that Bitcoin is actually good? Start with you, Ethan.
Yeah, and I think, taking a step back here, this environmental debate really affects Western miners more than anyone else. I think, the policymakers and regulators are looking at the environment in US, Canada, and Europe, whereas in places like Kazakhstan, South America, China, I don't think they really care. So this entire environmental debate and energy fight, I think, is going to adversely affect all of us here and our businesses. So I think it's something that we need to start pushing back on as much as possible. There's probably a right balance here between describing Bitcoin energy use as valuable, and also energy use itself is not a bad thing. As a human civilization, we should be striving for unlimited energy capacity and usage, and I think that's what the end goal should be. But at the same time, also getting out of the crosshairs of the media right now, which has been kind of a damper on everyone's business and has real effects on people, whether that's in New York with the regulators or otherwise. By
right, I was going to add to that. The regulators a double whammy, because those out east don't care about American AML laws. So it's a double whammy on the Western miners.
Yeah, exactly. And so just pushing back against this and trying to position ourselves well here in the media and get out of their crosshairs here, I think, is important. And I don't think anyone has the right answer. Obviously, people differ from rejecting it flat out to now, promoting only green energy. There's probably some balance in between that we can take, and yeah, hopefully we can get out of the media's crosshairs soon.
All right, any other comments?
I agree pretty much with all that. I think a large part of it's just going to be about education. As Ethan said, energy consumption does not equal emission. There's a huge energy mix with Bitcoin as it is. And of course, it would be good to mine as responsibly in regards to the environment as possible. But Bitcoin mining is designed to seek out the cheapest possible electricity, no matter where that energy comes from. Something to keep in mind. So if we adopt like a full green narrative now, it may come back to bite us in the ass later. It should be more about using energy as efficiently as possible, I think, in the long run. The narrative could be very useful in the short term, though. And I think it's a matter of, relativity too, right? Because Bitcoin mining doesn't happen in a vacuum. It happens in an energy market. And I think it's also useful to look at some of the other industries that are consuming large amounts of energy and look at what those industries are producing and what they offer to society, and look at what Bitcoin offers to the world and society, and sort of compare those two, which offers more value. But in the end, it is important to use it as efficiently as possible. I will say, though, that regardless, similar to what Tone said, whatever happens in the US, the East doesn't really care. So with our ESG movements and trying to mine more green, obviously that's not going to be something that's people follow suit around the world. I think China opened up 280 new coal plants this last year. So that would seem to probably offset any mining that goes green in the next year.
But lots of miners are using renewable already. Cambridge, I think, I'm not sure the data is really something we can really follow, but they say that more than 75% of the miners in the world are using renewable. I believe anyway that we miners, we want to get the cheapest energy possible, and hydro or renewable energy is cheaper and will be cheaper than oil and coal in the future as it increases. Also, I believe the pressure from governments and legal bodies around the world will really push our industry to go into using more renewable energy. But it's true that between the East and the West, we might not be put on the same level. So we'll see.
Yeah, so I'm going to play devil's advocate a little bit, staying with this topic. So nuclear energy is ranked as green energy.
Not
And-
producing carbon emission, yeah.
Yeah, not. I wouldn't call that renewable, but it's still listed as green energy. But I mean, I'm not really looking forward to the world where, there's a nuclear reactor in every single city because Bitcoin has become the world reserve currency, right? So how do you strike a balance there?
Well, I mean, first of all, I think there is enough energy with renewable, with like hydro anywhere in the world without needing to have like a nuclear reactor in every city. But nuclear energy for me is good to use. It's not producing any carbon emission. Yeah, it could be risky, and we've seen it like recently in Japan. But I think all in all, it's going to be a good way to continue mining and get power. I also believe that mining with nuclear will be done directly from the energy provider. Will probably set up a mining part into their facilities, but we'll see.
This is an interesting topic too, because it's like, where do you draw the line of green energy or ESG? Because everyone in their mind has different lines. Maybe you include flared gas, maybe you don't. Maybe you include nuclear, maybe you don't. And so I think it'll be interesting to see how different groups, investment funds with mandates or climate accords or green energy mining pools, they all draw the line. I think it'll also be very fluid over time. Those lines will probably shift to include things like flared gas in some cases, maybe not. So we're kind of monitoring that situation. I don't know if there's a right answer now, but it's kind of your personal preference on where you draw the line and just be ready to move it, I think.
Also,
I was going to say, I'll let you speak. I have one more question, and then we'll get some audience questions.
Also, like this whole green movement, the whole goal is to reduce environmental impact, and there's a lot of different ways you can do that. So I think before we reach an age where everyone's mining Bitcoin on nuclear energy, we'll probably try to capture some of that stranded or waste energy. If you trusted the data from the International Energy Agency, about 25% of global emissions come from natural gas, basically methane being pumped into the atmosphere as a result of oil mining, various other things. And so if we can capture just in the US alone, I think it's something like 80 gigawatts of wasted stranded energy, we can do two things at once: find really cheap electricity for Bitcoin miners that are off-grid and safe and distributed, and at the same time make big strides towards reducing environmental impact at the same time. So something to keep in mind.
All right, so my final question, and it's more of a question for noobs, as we like to call them, going to the space, because I constantly still get it, and no matter how many times it's answered, it's good to have more videos of it. What happens when the last Bitcoin's mined? Is the big question, and we'll start right here.
Yeah, so just background, block reward gets cut in half every 4 years, so over time that'll trend towards zero. I think 2140 is when the block reward will go pretty much to zero. And so over time, you suspect two things to happen. One, transaction fees to become a bigger part of mining revenue. Right now they're around 10 to 15% of total mining revenue. As the blockchain gets more usage, we expect that to go up. Second, we expect the value of Bitcoin price itself to go up. And so if you're paying your OPEX and your CAPEX bills in fiat, but you're making higher revenue through the Bitcoin price, then you're still going to be able to mine profitably. And so between those two levers, we expect profitability to continue to increase for mining and people to continue to make CAPEX investments throughout the next 120 years or so to continue to secure the network. I think every year we should be trying to add more hash rate onto the network and continue to make it more secure. So transaction fees and Bitcoin price.
And transaction, I think, will come earlier than what we think. I mean, probably in the next halving or two halving, miners will make more money from transactions than from mining the block. One question I have about this question, which is also interesting, is that how much will be the Bitcoin worth in 2140 for miners willing to continue investing in mining it? I think it's going to be pretty high.
I don't really have much to add to those two. Like, as the block subsidy goes down, each halving transaction fees become more and more important. So making sure that miners can get enough revenue and secure the network from transaction fees becomes more and more important. Obviously, price is involved in that. Yeah.
And the one thing I usually add to that is we are talking about a time 20, 30 years from now where if everything goes according to plan, Bitcoin is so valuable to the world that people are going to be mining at a loss. They won't care. They need to protect their wealth. Companies will, well, like we already have billion-dollar companies that function and exist because of Bitcoin, losing, $50 million a year running a mining farm at a loss protects their billion-dollar business. So it just becomes another expense, like paying the electricity bill or paying the internet bill to run your company.
Yeah, that's a really interesting point. I think we've seen it more on other networks besides Bitcoin so far, what we call like tribalistic miners. So Bitcoin Cash could be half as profitable to mine than Bitcoin, but they still have 2 exahash securing it. So there's someone protecting their stash of Bitcoin Cash wealth, even though they could be making more money mining Bitcoin with it, to go to that point. And also like the philosophical miners, I think are going to continue to increase. Companies like Coinbase, BlockFi's announced, a mining operation. If you have billions of dollars in value locked onto this Bitcoin network, you're going to want a seat at the table, whether it's to protect it or whether it's to have a say for things like Taproot. Every company that's building in Bitcoin should have a mining strategy.
Okay. Oh, one last thing. So how do mining pools make money?
We don't.
Yeah.
Oh, really? Shit.
That's a question for 3 or 4 years ago maybe. But we basically you charge a fee for miners that mine to your pool. Reduces variance and miner revenue, more stable payouts. If a miner were to mine by themselves, if they're not large enough, it could be months between times they actually find a block. So it's not really sustainable to run a business if you're only finding a block or getting revenue once every couple months. So the pool reduces the variance in this mining revenue and provides more stable cash flow to the miners. And then for this service, along with some others, there's a fee that's charged to the end user. There's also the concept of like there is no fee. The pools are just buyers of hash rate, and they offer the miners, say 99% of the hash rate's value to purchase it and terminate it and collect 100% of the value in the end.
All right, let's get to some audience questions. We had a hand up earlier, and go ahead and raise your hand. I'll catch that and walk over to you after.
I'm Kendall. I'm from Southern Ohio. I actually work at a coal-burning power plant, and so I had a couple comments. First of all, to your all's discussion with regards to the coal-burning power plant. my plant burns 98% energy efficient and clean energy, so we only have 2% emissions due to the emission controls that we have on our units, and so that's one thing that we need to speak on, I believe, as all of us get the energy prices that we do due to the facilities that supply us the power. In the U.S., the majority of the coal plants are actually clean. Now, when you go overseas, that gets a little bit different if they don't have the emission controls. So that's one thing that I wanted to ask is, we're going to have to turn this curve of talking about the poor energy consumption of mining, but we all in this room realize that that's not really the issue. We are probably the most efficient use of power out of anyone that uses power. The question is, when regulation comes that requires us to use energy credits, what is the strategy for the miners such as myself or the larger miners in here as to how they're supposed to buy energy credits or use enough green energy to make their own energy credits to support their business?
I'm not sure of how to respond to that as where we are mining from in Quebec, 100% of our energy is renewable, so it's not the kind of question we discuss internally. So I don't know if you guys have better answer than that.
I don't have a great answer here, but I would say that this discussion is good for on stage, and it's really relevant to public companies like DMG, for example, which have public shareholders and are in the media. But I think like private miners obviously are going to be working on a different means, and so I don't necessarily think every single private miner out there needs to start buying carbon offsets or whatnot. I mean, that's a personal preference of their business, and regulations that affect every industry will also affect miners in their state or country. So I think while it's popular to talk about, it does only affect like a certain portion of the miners in the ecosystem.
Don't have too much to add. I think a lot of people, at least for energy markets, a lot of that regulation is decided on a state level as well. So there's always going to be some markets like Texas that are open to this sort of thing. So maybe those miners don't have to worry about as much, and maybe more mining operations start shifting to those geographies that are more friendly to Bitcoin mining and recognize that a coal plant, given the right setup, can burn 98% efficiently. Of course, there's going to be some states where it's just kind of a blanket ban in the future. I think that's probably going to be inevitable. But I imagine just like with any new regulation, or like with China shutting down mining in some of its provinces, you'll just see miners move.
All right, any other questions, guys? Yep, we got one.
Hi, my name is John. I have a question about Braiins OS. Can you explain the advantage of Braiins over another modified firmware like Hive?
Yeah. So, are you referring to Hive OS? Okay. Some of the advantages. Well, we make all our own firmware from scratch, so we're not in any violation of GPL v3, like the MIT license. That once you make an open source firmware, any changes to that code needs to be sort of submitted and disclosed. Most of the third-party firmwares, well, all of the third-party firmwares except for us, are some form of like a hack of CG Miner, so they're in violation of this. Some of the advantages on, I guess, like a performance level, we do per-chip auto-tuning, basically meaning we adjust the individual chip's voltage and frequency, and then once we've done that to every chip on the board, we create a profile which allows these chips to spit out more hash rate per any given power draw. There's financial incentives as well, right? If you use the firmware with our pool, the pool's free. Yeah, I mean, it natively supports V2. Personally, I guess we kind of consider our competition more like the manufacturers and their stock firmware that they put on their machines, because we're constantly trying to provide more features and better performance than that. Like that's sort of the goalpost we set ourselves. We don't really consider these other firmwares that are generally white labels of other existing firmwares as the competition. I believe Hive OS is basically white labeling MSK Miner. Yeah.
And not to speak for Braiins here, but I think it's important when you're installing firmware that you assess your counterparty risk. There are like a few different firmware providers out there, and you are trusting them a lot, and so assessing who your counterparty is and what the risks associated with that is important. I wouldn't go and just install firmware from someone I've never met in person before or have no legal recourse on. And so, yeah, I guess Braiins team's pretty well known in the industry, good actor, and so that's why I think they're well positioned here.
Yeah, as some of these larger, we're seeing these public mining companies get larger and larger, and like Marathon ordering 100,000 devices, and the idea in the future that as these operations develop, that the shareholders are going to be okay potentially with these machines running firmware from an anonymous group that has no accountability in some far-flung part of the world is probably not going to be a reality for much longer.
All right, any more questions? All right. Oh, we got one more. All right, last one. Then we're going to wrap this up.
Thank you. Yeah, sorry, me again. So I had a question with regards to the block reward that we were talking about earlier. So I fundamentally disagree about the fact that mining will have to be profitable in order to secure the network. And so even if it's a break even, I can understand that. But the moment that it's no longer profitable, we lose the decentralization of mining. And so it will have to be profitable throughout the entire life of Bitcoin, or else Bitcoin comes into an issue with being 51% attacked. And that may not be anytime soon, I know that. But if it does become unprofitable, that loses the small miner like myself from even being interested in mining. Yes, I could secure my Bitcoin that I hodl, but at the same point in time, why would I expend any energy to do that when there's larger players? But as soon as that comes to fruition, then we lose that security that we need for the network. And so my question is, with regards to the block rewards based off of fees, how has it come to where it's 10 to 15% of the reward right now? How has that come about? Is it just because of demand? And if so, with the layer 2 solutions that we're seeing with Strike, I believe it is. Lightning, thank you. Lightning, how is it that we can prevent them from doing a very small block reward and waiting longer for their actual transactions to be? Yeah. How do we go about ensuring that it's profitable for the miners on layer 1 with regards to what's going to happen on layer 2?
There was that one attempt to make the block bigger, but that one failed. But what do you guys think?
Well, it's an interesting question, but I want to comment quickly on your intro there, because I feel like maybe I mislabeled my position there, which I don't think miners are going to be unprofitable in the future. It's a more nuanced discussion. One, there's no blanket profitability. Your cost of profitability is different than somebody over at this table. And so even in today's ecosystem where we have 140 exahash, if we were to think that energy costs are driving down to zero in the long term, there's still going to be quite a bit of hash rate securing the network, regardless of what happens to transaction fees and Bitcoin price. I mean, the network was even alive at 1 exahash, let's say 8 years ago. So I think Bitcoin is resilient, and the difficulty adjustment algorithm will make it able to survive whatever happens in the future. Bitcoin price, staying flat, and transaction fees being lackluster, and block reward decreasing. So I don't think it's really that big of a risk. Obviously, we want increased hash rate over time, and that will need to be a result of increased Bitcoin price or transaction fees. But in the case it's not, the Bitcoin network will still be secure. So yeah, just like a quick comment on the intro, but maybe I'll let one of these guys answer about the transaction fee question.
We can also make the block smaller.
Yeah, I mean, the block is producing less Bitcoins after the halving, so automatically the transaction fees increases. Other than that, I think miners will continue mining even at a loss at some point, and until you sell your Bitcoins, you haven't made a loss. So that's what we've seen by the past. And of course, we believe that the price of the Bitcoin will increase. So in that case, you will need to continue mining as long as possible. And our worst enemy is miner capitulation, and we all want not to go there. So we need to make sure that your operation can operate at the lowest cost possible, so that you can continue mining the longest possible and be one of the last miner mining the block.
Nothing to add to those two.
Well, a quick comment on Lightning and stuff. So Lightning, you could see how it takes away transaction fees from miners. And so as a miner, you could see that as potentially a negative thing. I try and see it in the more optimistic light, which is Lightning's good for the overall network and usage. And so it's going to drive adoption of the network that we all participate in, and earn money from. And so I think over time, although there will be areas of the network, both layer 2 or otherwise, grouping transactions together on exchange, that reduce that transaction fees, I think generally usage of the Bitcoin network will continue to drive that upwards. And I think it'll much outpace anything else that's coming there. Obviously, we're all on stage here talking because we believe in Bitcoin network, and we think it's going to be global, and it's going to be very valuable for society. So I'm banking on that, and if it fails, then so be it. But I'll go down with the ship.
Same thing here.
And just for context on that too, like countries are now making Bitcoin legal tender, so
Yeah.
you need Lightning solutions to actually have this scale and be usable by like large populace. So otherwise, the transaction fees may get a little out of hand in that regard.
I understand that. I guess my question was more to the consensus with the nodes right now is that you take the next in queue 0 fee transaction after a certain period of time. So why would somebody with a layer 2 solution that does that many transactions and can guarantee their own, why would they not wait longer and take that risk longer and do 0 fees? So that's something I think that we need to look at as miners in the future, is to figure out how we work with those layer 2s in order to set a static fee that they pay to write all of their 1 million transactions in one actual layer 1 block at a certain rate and guarantee them whatever time frame they want. So that's more of my question. I understand the process behind it. My question is, how do we guarantee that we can still be profitable mining after these layer 2s develop?
I don't have the full answer to that, but I would say that the people working on Lightning are Bitcoiners and they understand the mining process. Guys like Ryan Gentry, very familiar with how mining works, and so I hope that as these discussions come up in the future that they consider this, and I think they will. But I don't have the answer to your question there.
Yeah, no, that's going to be interesting because I think we're at least a decade away from even discussing that possibility. And it would be interesting because if the miners want to push for a higher fee, the non-mining nodes like myself, we're going to fight that. And we'll see where it goes. It'll be an interesting future battle. But great panel, guys. Thank you so much.
Thank you.
Excellent.